Imagine walking up to a pristine $300 million Boeing 777 parked at the gate. You see the airline's logo painted proudly on the tail. You see the flight attendants in their crisp, branded uniforms. You step inside and everything from the safety cards to the headrests tells you that you are flying with a global aviation giant. But here is a secret that the industry desperately hopes you never think about. That airline. It does not own the plane you are sitting in. It does not own the engines strapped to the wings. In fact, it might not even own the rights to the route it is currently flying. Behind the glamorous facade of modern aviation lies a quiet, invisible empire. A web of shadow corporations, debt structures, and master negotiators who pull the strings of global travel from unassuming office buildings in Dublin, Ireland. These are the leasing puppet masters. They do not wear pilot uniforms, they do not care about your legroom, and they do not care about your complimentary meal, yet they control the skies, and if they decide to pull the plug, an entire nation's aviation industry can vanish overnight. How did we get here? How did the ultimate symbol of national pride and technological triumph become a mere middleman in a high-stakes leasing game? The answer is a financial thriller, and it starts with a simple, terrifying truth about the economics of flight. By the end of this video, you will look at every commercial flight differently. You will understand why airlines are constantly on the verge of bankruptcy, why passengers are treated like cargo, and how a select group of shadow companies make billions of dollars off aviation while risking almost nothing. To the average observer, the airline industry looks like a gold mine. It is a massive $800 billion global market. It connects continents, fuels tourism, and powers international trade. Naturally, investors flock to it. The allure of owning a piece of the sky is incredibly romantic. But that romance is a trap. For decades, the airline industry has been famous for one thing: destroying capital. If you look at the history of commercial aviation, the cumulative net profit of every airline that has ever existed is close to zero. Think about that. Over a century of flight, billions of passengers, trillions of dollars in revenue, and almost no net profit to show for it. Yet the planes keep flying, the airports keep expanding. Why? Because the real money is not made by operating the airline, the real money is made by owning the assets and renting them to desperate management teams who think they can beat the odds. To understand how this shadow empire works, we have to look at the sheer, terrifying cost of an airplane. A single modern passenger jet can easily cost anywhere from $90 million to over $350 million. If an airline wanted to buy a fleet of 50 planes cash, they would need billions of dollars up front. No bank in their right mind would lend that kind of cash to a business with profit margins thinner than a sheet of paper. Enter the aircraft lessor. These are companies like AerCap, Aviation, and SMBC Aviation Capital. You have likely never heard of them, but they are the true titans of the sky. They go to Boeing and Airbus with massive checkbooks. They say, "We will buy 200 of your newest jets today." Because of their immense buying power, they get massive discounts. Then they turn around and lease those exact same planes to the airlines. Suddenly, an airline does not need $10 billion to start flying. They just need to pay a monthly rent. It sounds like a win-win, but this is where the trap is sprung. Because the moment an airline signs that lease, they are locked into a fixed multi-million-dollar monthly payment that they must pay. No matter what, whether the plane is full of paying passengers or sitting empty on a freezing tarmac during a global crisis, the rent is due, and if the airline cannot pay, well, that is when the puppet masters show their teeth. So, how do these leasing giants make their billions? It is a game of pure, calculated arbitrage. They borrow money at incredibly low interest rates because their businesses are backed by hard, physical assets, airplanes. They use that cheap money to buy the planes, then they lease those planes to airlines at a premium. The margin between their low borrowing cost and the high lease rate paid by the airline is pure, sweet profit, and the beauty of their model. They do not have to worry about rising fuel prices, they do not have to negotiate with pilot unions, they do not have to deal with angry customers whose bags were lost in transit, they just collect the rent. But what happens when an airline goes under? Because they do, frequently. For a normal business, a customer going bankrupt is a disaster. For an aircraft lessor, it is just another Tuesday. Because they do not actually care about the airline's survival, they care about the plane. The moment an airline defaults on its rent, the lessor sends in a team of highly specialized recovery agents. These are the repo men of the sky. Their job is to legally and sometimes physically seize $100 million jet from a foreign airport, fly it out of the country, repaint it, and lease it to another airline within weeks. In the leasing world, the asset is king. But this raises a massive question. If operating a plane is such a bad business, why does anyone still do it? How do airlines generate enough revenue to pay these massive lease fees and still keep the lights on? To find out, we have to look inside the brutal reality of an airline's daily balance sheet. An airline's revenue engine is a marvel of psychological engineering. They do not just sell seats, they sell options. They charge you for checked bags, they charge you for carry-on bags, they charge you to choose your seat, they charge you for a bottle of water. Every single inch of that cabin is monetized to the absolute extreme. And yet, even with all these fees, most flights barely break even, because the cost of actually pushing that metal tube through the air is astronomical. First, there is fuel. Fuel is an airline's largest and most volatile expense. It can eat up 30 to 40% of all revenue, and airlines cannot control the price of oil. A sudden geopolitical conflict on the other side of the world can instantly turn a profitable airline into a bankrupt one. Second, there is labor. Flying a plane requires highly skilled, highly unionized professionals. Pilots, cabin crew, maintenance engineers. You cannot cut corners here. Third, there are airport fees. Every time a plane lands, takes off, or even parks at a gate, the airline has to pay the airport. In prime airports like London Heathrow, just the right to land at a specific time, an airport slot can cost tens of millions of dollars. It is a constant, suffocating cash drain. Every single minute a plane sits on the ground, it is actively losing money. To survive, an airline must keep its planes in the air for 14, 15, sometimes 16 hours a day. It is a high-wire act with zero margin for error, and yet, some airlines manage to break through this chaos and build empires worth billions of dollars. How? The airlines that survive do not just fly planes, they build monopolies of scale. They do this through two powerful weapons: network effects and alliance cartels. Take the hub-and-spoke model. Instead of flying passengers directly from point A to point B, airlines funnel everyone through a massive central hub. By doing this, they can fill giant planes with passengers going to hundreds of different destinations, maximizing their load factor. Then they form global alliances: Star Alliance, Oneworld, SkyTeam. These are not just friendly partnerships, they are legal cartels. They allow airlines to share codes, coordinate schedules, and essentially carve up the globe among themselves. If you want to fly from a small town in America to a small town in Asia, you will likely use 3 different airlines but pay one ticket price. This network is so incredibly complex and hard to replicate that it completely locks out new competitors. A startup airline cannot just buy a plane and compete with Delta or Lufthansa. They will be crushed by the network. But even these massive networks have a weak point, because no matter how big you are still flying in a world governed by external forces, and those external forces are getting more volatile by the day. The airline industry is uniquely vulnerable to what economists call black swan events. Pandemics, volcanic ash clouds, economic recessions, terrorist attacks. The moment people stop flying, the entire house of cards collapses, and as we look to the future, the challenges are only growing. Governments around the world are pushing for massive carbon taxes and green regulations. Airlines are being forced to invest billions into sustainable aviation fuels that are currently 3 times more expensive than regular jet fuel. At the same time, artificial intelligence is rewriting the rules of ticket pricing. Algorithms are now tracking your every move, predicting exactly how much you are willing to pay for a flight based on your search history, your location, and even the battery percentage on your phone. It is a desperate race to squeeze every last cent out of the passenger, just to pay the rent to the leasing companies. So, what is the real economics of owning an airline? It is an illusion. It is a high-stakes, glamorous show put on for the public. When you look at an airline, you are not looking at a wealthy, independent empire, you are looking at a bank with wings. You are looking at a middleman that assumes all the operational risk, fights all the labor wars, and absorbs all the fuel price shocks, while quietly transferring its cash directly to the leasing puppet masters who own the metal. The next time you board a flight, take a look at the tiny placard near the cabin door. You might just find the name of an Irish leasing company you have never heard of, and in that moment, you will realize you aren't flying on the airline's plane, the airline is just renting it and hoping they make enough from your ticket to pay the landlord.